Wow, guys, I came across a very interesting housing market survey today, and according to this survey, 69% of Americans think that a housing market crash is coming. That is quite a bit and is definitely the overwhelming majority. And just realize this is not my opinion, this is data that was taken from a survey, and of course the article and the information is all linked down in the description if you want to check any of this out for yourself. On top of that, 86% of Americans think that mortgage rates will continue to increase into next year. So many people are of the mindset, just like me, thinking that the market is probably going to be headed down and interest rates are going to continue to go up for the foreseeable future, which I think is the only viable way to save our country at this point. But among other things, this survey had some other interesting data points I want to go over here. And one of them was nearly 1 in 5 millennials, 18% of them, doubt that they'll ever be able to afford a home. Now that's pretty sad because, that's my age group, and people in my age group have been in the workforce long enough where you should have been able to save some money by now if you've been financially responsible. Obviously, people who aren't responsible with their money can never save any money and actually buy a house. But if you've been financially responsible, you should be getting to the point in life where you could be able to buy a home. And the fact that almost 20% of them feel like they might never be able to is quite sad, if you ask me. Now get this, one of my recent videos was about buyer's remorse, and in this same study, 53% of qualified buyers, meaning somebody who could buy a house, right? They say they regret not purchasing a home when they had the chance, and 15% of current renters haven't purchased a home yet due to concerns about the housing market possibly going down. I guess buyer's remorse works in the opposite direction too, because sometimes people pass up on opportunity and wish they would have seized it when it came. And that's when buying or selling in real estate becomes tricky, guys, because it's almost impossible to time the market exactly, whether it's at the bottom or the top or wherever you feel comfortable with. It's almost impossible. You just have to use your best judgment and hope you made the right choice in many cases. And obviously with half of these people regretting that they didn't buy when they had the chance, that's pretty significant as well. And in this same study, 26% of Americans believe it will take 2 years or longer for the housing market to feel normal again, meaning that, it's going to kind of look like it did pre-pandemic. Not saying price-wise, but maybe the balance of supply and demand, and prices will be more reasonable. So that's quite a few as well. That's more than 1/4 of all Americans think this. And on top of that, 18% of people surveyed think that the housing market will never be normal ever again. And that's pretty significant as well. That's almost 1/5. So lots of interesting information in this study, which I think is a very big indicator of consumer sentiment when it comes to the US housing market right now. Now get this, not everywhere has seen crazy price appreciation over this boom in the housing market. There have been 4 metros where home prices have risen 30% or more in the past couple of years, and guess what? All 4 of those metros are right here in Florida. And out of all of the areas that this data tracks, when you compare 30% or more price increase compared to the lowest area that saw the lowest amount of price increase, that is actually Cambridge, Massachusetts area, where they only saw about a 9.1% uptick in prices. So obviously the boom that you saw can vary widely depending on where you live. Check it out, another one going up over here, right across the street from the golf course. It's right over here is Miami Beach's golf course in South Beach. There's so many interesting data points from this survey, guys. 75% of the people surveyed think that it's already a good time to be a homeowner, meaning that, if you had already purchased a home before things got nuts, then it's a good time to be a homeowner. And I completely agree with that. Obviously, you've seen your home value skyrocket in the past couple of years, if that's you, and you probably got a mortgage interest rate that you'll probably never see again in this lifetime. So definitely it's good to be a homeowner, before all this started, or even towards the beginning when there were still plenty of good deals and rates were low. And only 34% of the people surveyed think that it's right now is a good time to buy a home. So that just goes to show you that people are not feeling good about buying a house right now, and it's showing across the numbers across the board, guys. I mean, there's a ton of information out there showing how the amount of homes being sold are declining and mortgage applications are declining. Every single factor that we can look at that, basically gauges buyer demand is going down right now. And another interesting point to note in this, because everybody wants to know, when is going to be more inventory coming, or what's going to happen with people and how are they going to approach selling as the market is shifting. Well, 80% of the surveyed homeowners in this study said they have no plans to sell their home in the next year. Now, that's only just 1 year, so that's very short-term outlook. If they would extend that to 5 years, for example, then I'm sure a lot more people would have said, yeah, I might be thinking about selling in that time frame, but 1 year is a very short time frame. But then again, like we've talked about in prior videos, sometimes people need to sell, guys. Sometimes there's not the choice. Sometimes it's a necessity. So whether people say they plan to sell or not, life just happens, right? So I think it was John Lennon who said something like, life happens while you're making plans, something along those lines. So you can plan as much as you want, but at the end of the day, nobody knows your future, right? Got another one going up over here. Full on work site right now. Two right next door to each other. The next thing is there was another interesting study done recently about what type of inventory is coming to market right now. And it's no surprise that it's getting harder and harder to find a house anywhere in the country listed below $250,000. So here's some interesting information on this. Since we are seeing lots of new inventory coming up on the market across the country, most of it is above this $250,000 price range. So listings for homes priced at $100,000 or less were down 21.4% in June this past year. So looking for something in this price range is getting way more difficult than it was in the past. And homes that are between $100,000 and $250,000, those listings are down 12.4%. But overall, inventory across the country, they expect, and this data is from Realtor.com, by the way, they expect that inventory across the country is going to go up by 15% by the end of this year. Now, I also think, guys, that this is probably going to continue to be the new normal, at least for a while. Anybody that was looking to buy a really cheap home prior to, this housing market boom, well, that probably is not going to exist anymore, at least in the fashion that it did before this boom started. But even though that it might not exist anymore, obviously the market is turning around and there is a lot more inventory coming up, but just be prepared to pay more for it than maybe you were planning to pay before. So, if you can afford something that's over $250,000, that's going to greatly increase your odds of finding a home that you like. And to be quite honest with you, a $250,000 home anywhere in the country right now is quite a bargain from the point of view that is still way below the median price home of $417,000 in August of 2022 right now. So I think most people, if you're planning on buying a house, no matter where it's at across the country, you should probably have a budget at least in the $300K range to have options, right? And that's for a lot of areas. Obviously, there's places across the country where you can't touch a house for that price, and Miami is one of those areas. But I know that's not the norm everywhere. Check this out. Got this huge open space here nearby the golf course and Miami Beach High School. That's where I'm at right now. It's pretty cool to be over here because I've never actually walked through this neighborhood in Miami ever. All these years I've been living here, never walked through here, just drove past it. Now, even though our government officials won't admit that we're in a recession, a lot of big companies across the country are flashing the warning signs that no guys, we are in a recession and we're even concerned about it, and our businesses are taking a hit because of it. And just to name a few, Walmart, McDonald's, AT&T, these are some of the companies that we're talking about here that are flashing the warning sign right now. Costco as well. All these places are starting to have to increase their prices and are seeing their revenues go down. And it doesn't end there, guys. Some tech companies are having trouble right now too. Most notably, Meta, the owners of Facebook and Instagram, and Snap, the owner of Snapchat. These companies are in big trouble as well and are seeing their revenue go down because as the economy starts to slow down, their advertising revenue is going down. So lots of companies are concerned about what's happening right now. So you can believe whatever the government tells you, but our own US companies are telling us that it's not the picture that the government is painting. So just think about that for a minute. And it doesn't even end there, guys, because in this same report, it was reported that credit card balances have risen 71 billion over the past year, and in April, the personal savings rate fell to its lowest level since 2008. So a lot of people that got all this money from the pandemic, whether it be PPP loans or the stimulus checks, whatever, all those funds are starting to dry up. And that's one of the reasons, because even AT&T, who was a business on this list that's reporting trouble, is saying that people aren't paying their cell phone bills on time. So guys, if people aren't paying their cell phone bills and Walmart is seeing lower sales, McDonald's, the cheapest fast food restaurant in America, is seeing slower sales, and all kinds of things like this are happening, how can we not believe this is a recession? I mean, I don't believe it for a single minute. Now, I will say the recession can literally be brought on by people thinking that we're in a recession. So the more that we talk about it and the more companies brace for it and the more consumers brace for it, the more it will actually become a recession just out of people's habits and behaviors. And it's been theorized at this point that that could be the reason why the government is basically coming out and flat out lying that this isn't a recession, because they don't want to spook people into thinking it is, and then because we think, therefore it is, so it's kind of just a mindset thing that maybe they're trying to convince people that things are still good, and if people feel like it's still good, they'll still spend like it's still good, and hopefully that might be enough to actually tip us out of a recession. So I guess I see the logic to that, but I'm just totally against lying to the American people. So if these guys would just be totally upfront and straight up with people and tell it like it is, but then, give some legit reasons of why people shouldn't worry, instead of this bogus unemployment numbers that obviously we're seeing are going up, then maybe we could feel good about things. But when the government's lying to you, and we have a bunch of companies flashing the warning signal, then obviously it's looking like trouble is coming. So what else are we supposed to think? An interesting story out of Florida is something I read today from the Florida Realtor Association, and there was an article saying how Palm Beach and Broward and Miami-Dade counties, so down here in South Florida, are some of the most overvalued rental markets in the country. And sometimes they're outside of this area too, like Fort Myers, Sarasota, Bradenton, Tampa, Lakeland, Florida, Orlando, Daytona Beach. These are also in the top spots of rental markets that are overvalued right now. But here's an interesting dynamic that they're talking about in this article. They are saying that they predict rent prices will still be going up in these areas over the next couple of years. But as of right now, in some pockets, they're starting to see a lot more vacancies pop up, and they're claiming that it's because of remote workers that moved here during the pandemic are now being called back to the office, because even if you have to go back to the office for just 1 or 2 days a week, no matter where your company is located, and it's not where you move to in Florida, then obviously you have to move back to that area, even though most of the time you're still working from home. So they're saying that 3 months ago in downtown West Palm Beach, there was nothing available for 1-bedroom apartments, guys. And downtown West Palm Beach is a pretty small area, so there's not that much inventory there to begin with, but there was nothing available just a few months ago. And according to this agent they interviewed there, he's saying now there's a surplus, okay? He said it's literally like someone turned off a tap and it just stopped, meaning like the demand of the people coming in to move into the area, which I find very interesting. And I do think that Florida has maybe seen its peak of the demand for people to move here, especially that so much of it was driven by the pandemic and remote work over the past couple of years. Now, they also interviewed somebody who lives at an apartment complex in Palm Beach Gardens, and he said that when he signed his lease last October, there were only a couple of units available. The rents went up, people moved out, and now the parking lot is basically empty. And as of today, there are 44 vacant units listed available in this place. So we're talking going from just 2 or 3 available last October, fast forward to August of 2022, and now there's 44 units. That is quite the increase, guys, and I'm waiting to see if this is gonna happen down here in Miami, because I saw it firsthand go from a ton of available rental units here, which was always the norm, down to like, you know, a month or two supply of rental units, which is unheard of for Miami. So I'm really curious to see if this is gonna hit us down here, or if it's gonna remain in less popular areas like West Palm Beach, for example, because that area has never been as high of demand to move to as Miami. So I'm curious to see how this is all gonna pan out myself. Anybody want a couch? It's free. Now, since 69% of Americans surveyed think that a housing market crash is coming, I have another interesting piece of data to add to this story that may confirm this could actually be happening. First of all, it's important that we recognize when the housing market crashed back in 07 and 08, it took several years for the housing market to reach the bottom. So the housing market crash happened in phases where literally every month the housing market would go down by a percentage point or whatever, and then by the end of 3 years or 4 years, you have a 40% decrease in home prices on average, right? So that's how it happens. It's not like today prices are this and tomorrow it's down 40%. It doesn't work like that. It happens gradually, month over month. So first, let's acknowledge that. The alarming statistic that came out today is that as dramatic as the last housing crash was, get this, guys, the strongest single month decline in home prices was only 1.19%. So basically 1.2% was the strongest month they saw of negative equity coming to the housing market back in the 08 crash. And as of July this year, so this is the most up-to-date data, we saw home prices go down on average 2% in the past month. So this literally is almost double the amount of home price declines that we ever saw during the last housing market crash. Now, it does say in this article that we would need to see like 6 straight months of this for people to start really getting scared that a crash is here or it's coming, whatever. But the reality is, guys, by the time that happens, 6 more months from now, say it keeps going down 2% for 6 months, that's 12% in 6 months. And by then it's already too late. So if you're somebody who was trying to maybe capitalize on the crash or worried about when is the right time to sell or whatever, by the time that gets announced, the show is over, guys. So you're already well into the crash by then, and there's nothing you can do about it. So that's why I make these videos, to give people a heads up on the most recent trends of what's happening right now, instead of waiting, you know, months or even years to wait until it's official. Let's talk about it now and get ahead of it and try to plan and prepare as best as we can, so that way everyone's ready. That's the whole point. And on top of this, it says in this article that they think it could take 5 months or longer for these interest rate hikes to fully realize the impact on the housing market. And since they just started raising rates at the beginning of this year, and only recently to a significant amount where it's really starting to sting home buyers, we haven't even seen what these interest rate hikes can really do to the housing market yet. So that's another big concern that we all need to pay attention to. So I think that 69% of Americans just could end up being right once we start taking all these factors into consideration. On top of this, guys, what else do we have? We have a sharp increase in the supply of homes available. The amount of homes available on the market for sale have risen 22% over the past 2 months. So right now, we're literally seeing the perfect storm for what could potentially create the housing market crash. And I think at this point, the only thing that could prevent the housing market crash is further government intervention and the Fed's intervention, which a lot of you have said you're tired of. I'm tired of it too. I wish they would just let it go and just let the free market do its job. That's what I want to see as well. I don't know if we'll see it or not. My guess is probably not. These guys have too much at stake politically and financially to let it all just drop. So we'll see. We'll see how much intervention that they can take before they just end up messing things up beyond repair. Who knows, right? But one last thing to add to this is, according to this article, they say we're short about 700 listings right now to make the housing market crash go into effect, essentially, right? And they say we would need another year of inventory increases like we're seeing right now happening to get us to the point where there's too much inventory available. So a year goes by fast, guys. We'll see what happens in a year from now with interest rates, where the inventory is going to be at, and so on. And I'll definitely be here to report on that. If you guys enjoyed this video, please subscribe to the channel. Check out my next video on the screen right over here, and I'll see you over in the next one.